Matt Williams with JTM Williams Capital Management. This is the mid-month update for June 2026. I'm recording this video on Sunday, June the 14th, 2026. As a reminder, the ETFs, indexes, and securities mentioned in this video for illustrative purposes only and do not constitute a recommendation to buy or sell. Please refer to the disclosures at the beginning and end of this video. Please make sure to like and subscribe to the channel. Let's get started. It's been an interesting month so far, very much a momentum wind down where thankfully we've actually gotten some breadth improvement. I know that's something I've been harping on here for the last few weeks and months, is that breadth has been extraordinarily narrow here off this rally. I mentioned, I think it was in the last video or the mid-month video from last month, that I felt that one of the best things that could happen is that the equal weight could dig in, start outperforming the S&P, and you start having some rotation, which is exactly what we need for a bull market. Let me go ahead and share my screen here and we can get started. As we can see here with the S&P 500, quite a bit of a drawdown here from the start of the month. We've bounced quite a bit, and I can actually end up showing something, a intraday chart to kind of show some people how I typically look at things as far as if you want to start trading a little bit more short term. I'm a lot more week to week, month to month with position trading, but sometimes it is beneficial to really get in and look at how things are doing intraday. Markets are fractal, so the same patterns you can see week to week, month to month, you do see hour to hour in the market. So again, with the S&P, had quite a bit of a drawdown. We bounced a bit at the back end of the week. Again, we'll show here with the equal weight relative to the S&P 500. It has led here since the middle of May. So again, you are having improving breadth. Thankfully, the equal weight, after not being able to make a new high there for a few months, has finally broken higher and is outperforming the S&P here since this correction started. Moving on, I'll show the breadth charts I looking at, where again, we have had improvement, not just let's say like in the percent of stocks above the 20, 50, 200-day bullish percent index. Everything here is over 50%. All these are over 60, and even the short terms over 70%. So again, that's very good. So even though the S&P is down here for the month, you have had breadth improvement, which is what we've been looking for. Moving on, so the advanced decline line for the S&P, while it has not made a new high, it's been rallying here. So it's been up the last 2 weeks, even with the index down for the month. One of the things that I wanted to go over that came up here this week, I'll get to the SpaceX IPO, which was probably the biggest news of the week. But I was watching a video from an advisor in a different area of the country, and he was saying that one of the biggest things he was looking at is the relationship between value and growth. And from what he can tell, there's been quite a reversion now from growth going into value here this year. That is a big story, but I'll say what I think is one of the most untold stories here so far this year is the composition of the various value and growth indexes, and it really paying to know what you own. There is a major difference between S&P growth and value, what I'm seeing in the Russell, the Vanguard indexes, and I'll show you what I'm talking about. So normally, there is a very high correlation between the Nasdaq 100 and the Russell 1000 growth and the S&P 500 growth. Those tech stocks, those growth stocks, are normally what make up the Nasdaq 100. And from what you can tell here, that here year to date, the Nasdaq 100 measured by the QQQ is up 17.5%, while the Russell 1000 growth, and I'm using IWF as the proxy there, isn't even up 3%. That is a massive, massive delta. If you go back all the way here, let me just move this over. I got these a little unordered. If you go back and you look, this is the Nasdaq relative to Russell 1000 growth going all the way back to the tech bubble. And down here, what I have is this is a weekly chart, and it's a 26-week rate of change. So what it's showing is what the relationship is in terms of performance spread over the previous 6 months. As you can see, this is the biggest delta in terms of rate of change, in terms of outperformance that the Nasdaq 100 has had relative to the Russell 1000 growth, going all the way back to coming off of the tech bubble lows there in March of 2003. Now, using this proxy, I can't show the data going back to, let's say, 99 or 2000. There was a little bit higher of a reading if you're able to go back a little bit further. But again, this is the biggest delta in outperformance between the Nasdaq 100 and the Russell 1000 growth. Again, going all the way back to the tech bubble. Excuse me. Sorry, had a lighting issue there. So that, again, I think is one of the biggest untold stories there of the market here this year, which is knowing what you own, that if you actually thought, okay, the tech's been leading, the Nasdaq's been leading, if I'm overweight growth, I'm going to outperform the S&P 500. And that has not been the case. And a lot of that has to do with a lot of the parts of growth that's outperformed have been some of the smaller semiconductor stocks. It hasn't necessarily been NVIDIA. It hasn't been Broadcom. It's been some of those mid-tier, larger semiconductor companies that somehow found themselves in the value index here starting this year. So if you look at, let's say, Russell 1000 growth, Russell 1000 value, the largest component now is Micron, which is one of the largest components now of the semiconductor index. So again, I'll agree with him that it's always a big story on if value or growth's outperforming, because how you have your portfolio tilted is going to dictate your performance relative to the S&P in terms of your stock allocation. But again, it's knowing what you own, knowing the compositions of those, because again, if you've been long the QQQ as your growth proxy and long tech and long semiconductors, you've outperformed by quite a bit. If you've been long Russell 1000 growth thinking that's how I'm going to take advantage of this, you've underperformed quite a bit, and it's actually paid off being better in the value indexes. And again, I think is what I've shown here, that may have to do with this chart that I've shown here quite a bit this year, which is showing the relationship between NVIDIA and the semiconductor index, and how NVIDIA here for the better part of a year has been drastically underperforming the semiconductors. And from there, you've had all this leadership from the Intels, the Microns that have taken over from NVIDIA and Broadcom, etc. And it has really changed, again, the performance in terms of which types of indexes you own. So again, if you trade sectors and you've been long the semiconductors and tech, you've had a fantastic year here so far, especially off of the March lows. If you've try to take advantage of it, being long just growth indexes, it's been a very mixed bag. So let me go here, and I'll even show this. This is the Nasdaq 100 relative to the Dow Jones ETF. Normally, again, growth value. So depending on if you're someone like me, it's a little more old school, and the way you look at growth and value is the Nasdaq compared to the Dow. This is where the traditional relationships have worked out, where again the Nasdaq's outperforming the Dow by over 10 percentage points here so far year to date. And again, same thing if you look at tech's outperforming the S&P 500. This is another chart going back to the tech bubble, where it's outperformed here year to date quite a bit. So let me go back and we'll just look at the last 2 years. Same thing. It has blasted off that March low, and a lot of it's been powered by the semiconductors. So again, if we just do this and just say, yeah, so again, it's been semiconductors over the S&P, which has been causing a lot of that tech and Nasdaq outperformance. What I wanted to show here, this has been I've got a lot of questions, from clients here this week related to the SpaceX IPO. And, should I be long the SpaceX IPO? Should I buy some of it? And what I'll tell them is, my opinion, and I'm going to go off of what a lot of professional traders do, which is the second that SpaceX open, you put what's called an anchor weighted volume price on the open. And what the professionals typically do is what anchor weighted volume price is what it's a technical indicator. It's a visualization of the price, of the average price by volume that traders can experience from a anchor point. So what this yellow line is, because we don't have any moving averages, we really don't have a whole lot of support resistance in terms of price, because SpaceX has only been trading for less than a day. The only way we can know are the buyers or the sellers in charge is by, dropping a anchor weighted volume anchored VWAP from the open of when SpaceX started trading. And right now what this is showing is that as of the close there on Friday, June 12th, from its open, the average investor that bought SpaceX right now actually has a slight loss in terms of the volume of when they bought. So again, what I have told clients is I don't necessarily have an opinion on SpaceX one way or the other. Again, most professional traders, ones that use this type of indicator, what they would look at is they would say, okay, well, if SpaceX is above it, we stay long. If it drops beneath it, we stay away from it until it gets back above. And I'll say this, not a prediction, but I would say again, it potentially, let's say there's a shakeout, you have some selling. I would wait again until, this anchor weighted volume average price, the price gets back above it. And that's when I would look to potentially establish positions. So again, it's not my job to be a fundamental analyst of, SpaceX. I typically do not invest in individual stocks. That's not my style. I'm much more of a sector index factor trader in terms of global macro. I leave the stock pickers to other people that are way better at it than I am. But yeah, that's right now. I'll say like that is how I would trade it. That's how I've advised clients and anybody who sought my opinion. That's how I would trade it. Yeah, that should wrap up here for the mid-month of June 2026. Apologies there for the technical difficulties with the light going out. I will again do one of these here in about a week or two. If anybody has any questions, please feel free to reach out to me at 703-782-3110. Happy to have a free complimentary consultation with anyone to discuss their finances. Again, looking forward to hearing from you. Let's see what the week brings here, as far as a trading week. Looking forward to hearing from you. Please like, subscribe. Hope everyone has a great week.